Disclaimer: this is not financial advice. Please do your own research before making any financial decisions. Hello everyone, I'm Ali. I'm a software engineer with main focus on mobile. Recently, I was thinking of taking my finances under control and learning more about how the financial markets work, how I can start investing. And one of my best friends, Teddy, has a lot of experience when it comes to finance. And he is a professional, and I wanted to ask him for help.
I would say professional. I would say like someone that is investing in for a long time, like for over 6 or 7 years now in the stock market. So I have some experience on it, but I would not say professional though.
Okay.
Yeah, and then it is with a great pleasure that I will try to answer your question, Ali.
Thank you so much. All right. So, what are finances in general, and why are they important?
Okay, so that's a very broad question, actually, Ali. But I made a few research just to try to also understand this same point: what are finances, what is finance in general. And when doing those researches, I realized that finance is actually a term that was kind of recorded in English, in the English language, is like in 1770, so 18th century, and is considered as the art of managing money. Or, funnily enough, some people actually consider it as or some kind of science of monetary business. And what I find very interesting is that art and science are completely different, right? Art is mostly influenced by feelings and opinions, while science is seen as something fairly objective, but guided by data, right?
Yeah.
So depending on whether you consider finance as an art or science, you will approach it differently. When it comes to me, the way I see it, it's kind of bridge of between the two. I see finance as the scientific art of leveraging money. And I really want to insist on leveraging money because feelings and opinions will have a strong place within your decision, and it actually has a strong place already within the financial world, and people cannot stop themselves from having emotion about whatever they invest in. Could be real estate, stocks, government bonds, could be anything, topic that we will discuss probably later. But opinions and feelings will always come in place. The question, and this is why it is a scientific art, the question is to learn to eventually manage those emotions, take the best out of it, and eventually back some of your ideas, feelings, gut feelings, should I say, try to back those by some kind of data that will actually help you win and succeed in the financial market, which is, as I recall, just nothing else than the scientific art of leveraging money.
That's very interesting to know. Thank you so much for all the nice details. But what are financial markets? You hear about master markets and financial markets. What are those and what can they do for me?
Yeah, actually, that's a very good question, and that's remind me that I kind of skipped one of your first questions. You say like, what are financials? Yeah, finance, and you also asked me why this is important. And now you reiterate your question with telling me, with asking me, why is it important for you? And I think that, or what they can do for you, sorry. And I think that, just like Naval Ravikant famously tweeted one day, money doesn't buy happiness, but it buys actually freedom. And regardless of how you look at it, how you see the notion of being free, is still like the idea of being free is still very closely associated with the notion of simply being happy. And when you ask me what are financial markets, I want to say that at the end of the day, financial markets are simply kind of places, physical or digital, where people trade, usually financial securities and other types of derivative assets, in order to leverage money, just like I mentioned before. So financial market being a place where people trade, I think that what it can do for you, skipping the Mr. Market for 1 second, what it can do for you is that it can simply help you make, like, and this is the end goal, make more money, helping you therefore buying eventually more freedom and as a consequences, eventually becoming a free person. Now, there is a point that I want to make on Mr. Market. This is something that I mentioned to you, I think a couple of weeks or months ago. I told you, yeah, Mr. Market is a term that was actually introduced by Warren Buffett, the famous investors. To be honest, I made some additional research, and it was actually introduced by Benjamin Graham in 1949 in his book, The Intelligent Investor. And in this book, Mr. Market is kind of an hypothetical investor who is driven by emotion, such as panic, euphoria, apathy, etc. Like all the emotion, you name it, Mr. Market will have it.
So the market kind of reacts to the emotions of the, most of people who are engaged.
Yeah, it's actually very true. Like the market is, and Mr. Market, why I like to compare the market, and I think the allegory of Mr. Market is very good, is that the market is composed of a lot of individuals that are, as we mentioned, are here to trade something.
Yeah.
But as we know, individuals cannot separate their emotion. We have discussed it just earlier. Most people try to be rational, but most of the time they are not. They are driven by their emotion. And like, because the market is kind of dependent of people's decision and willingness to trade, and people have emotion, the market and Mr. Market is nothing else than just lunatic. Those are the Mr. Market is a crazy person, driven, like it's schizophrenia 10 times, because instead of being having 2 or 3 or 4 personalities, or should I say bipolarity to be exact, instead of having different personalities, you have like millions, if not tens of millions of personalities that are here influencing whatever you become.
Yeah, that's very interesting. So we have this lunatic.
Yeah.
What are we supposed to do with it?
Yeah. What do we usually do when we face lunatic people? The thing is that, first of all, it's important to keep yourself in control. Like, eventually you have the option of ignoring them, but sometimes it's very difficult. And especially when you need something from them, you cannot ignore them. So what you need to do is like be patient. Do not try to argue too much. Arguing with a lunatic person is nonsense. If you have the option, clear the air, at least for yourself, and accept that the lunatic will do probably a lot of talking, so will run the conversation a lot. So in short, what you can do with a lunatic is just remaining calm, objective, regardless of how crazy this person is. And in the case of Mr. Market, it can be very crazy.
It's true.
So you remain calm, you remain objective, and assuming you do that, when you will negotiate with Mr. Market, you will realize that you can leverage some of his crazy periods. So some of those moments of panic, you will be able to use them in order to negotiate at the better price. And when the Mr. Market becomes too euphoric and thinks that everything that he needs to sell is extremely valuable and maybe becomes too expensive, the only thing that you need to do, staying calm and objective, is to eventually pass on the deal. Accept that, okay, he is now in his euphoria phase, maybe not the best time to trade with him. Let me wait and see if there are other opportunities. And at the end, this is how you deal with lunatic. Staying calm, looking at the situation with as much objectivity as you can, and sometimes also knowing when not to make a deal with the lunatic.
Yeah. That's true. I think that's a very good metaphor and helps when it comes to engaging with the Mr. Market. All right. I think another question that also lots of my friends have when they want to, start investing, they struggle between lots of different names. Like, for example, what's the difference between stocks, ETFs, government bonds, and all of these? And then you also have other things that most of people know, like real estate. But what's the difference?
Let's maybe start with the definition of each of them.
Yeah.
So if we look at stocks, stock is a share of ownership of usually a company. So you can see it as a cake. The cake is the company, and you received, or usually you buy, but you can also be lucky and just receive it for free sometimes. But you decide to buy a piece of cake, and this represents a part of the main cake, so the company, and this belongs to you. Therefore, a part of the cake now is your property. You own a part of the cake. This is maybe not the best example, but I think it's still very easy to see that a stock is just nothing else than a share of ownership in a big cake, which is the company. Now you mentioned another term that is ETF, so exchange traded funds. So those are a little bit more specific. They are becoming more and more popular, and basically ETF are seen as investment security, structured to track anything in the world, from price of individual commodity to large and diverse collection of securities. Like ETF are basically just this kind of a magic trick that I don't know who invented that, but was very, very smart. Kind of a magic trick that just perfectly and almost real time copy something else at the end of the day. And the main advantage of ETF is that it can be traded on the stock market, in the stock market. While this main thing that you have, because there are, for example, ETF that literally copy strategy, investment strategy, and you cannot just trade investment strategy. Like either you have an investment strategy, you know someone that has an investment strategy, and you decide to copy it, but you cannot bet on it and trade it on the stock market.
Yes.
ETF made that possible, and usually ETF also pool a certain amount of assets and securities together. So, for example, if you would like to have, I don't know, Google stock, Amazon stock, Netflix stocks, and all those different stocks that are fairly expensive, if you want to have them all in order to have a kind of a diversified portfolio, you would normally have to go and buy each and every stock individually, accumulating probably thousands of US dollar or euros of investment. An ETF can literally reproduce the performance of Google, Netflix, Amazon, etc. for a fraction of the price, because the price of the ETF is just decided by the maker, so the market maker. So at the end, ETF, as I said, magic trick that just copy anything from investment strategy to the price of different assets, and the biggest advantage is that just you can buy it directly in the stock market.
So basically you want to buy, for example, some shares of Google and Apple and Microsoft and Amazon and all of those big companies, then you can basically, for example, just buy an ETF that contains those.
Exactly.
Includes those, and then each of your share contains a portion of those companies that you like.
Exactly. So like this is it. This is a very good summary of it. It gives you an exposition to many more companies or sometimes markets through one single security or asset, and that you can trade at any time, which make it very convenient in general.
It's true. Yeah, I think that's very convenient, because sometimes if you see the number of companies that are included inside the ETF, if you just want to start with a small amount and you want to buy like one share of all of those, you can. And even if you do that, in the ETFs they usually have a different portion. So for example, 5% Apple, 3% Google, or something like that, and kind of managed in a way to maximize the outcome.
Yeah, and there are also other advantages sometimes that ETF are managed by professionals. So sometimes if you buy an ETF that just track, for example, the top 50 tech companies, normally, if you would do that without an ETF, you would like to go identify what are the top 50 tech companies in the world and buy each and every stock individually.
Sure.
And this is not something that it fixed in the time, right? The top 50 companies in 2021 are not the same in 2022 and will not be the same in 2023. lot of them will be kind of the same, very likely, but some will change, like will grow bigger, some will fall. So if you buy an ETF, someone that is the responsible for this ETF will make sure that whatever the 50 stocks that are tracked in this ETF, they will make sure that they really represent the top 50 tech companies in the world, without you having to track every single one. And they will do that for you very professionally, and you will not have to bother. This is also another convenience provided by ETF, and that's make it actually really why this is one of the biggest and considered passive way of investing in the world.
Yeah, it's very convenient.
Yeah.
But consider if I do buy all of those 50 tech companies manually, and the next year some of them change and there are some new companies come in the list of top 50, and some of them go out of the list. And then basically I have to track that and then sell the shares that are out and buy the ones that are in, right?
Yeah, exactly.
And then that way I can kind of manually keep myself on the right path.
Yeah, you could do that manually, but you have also to think also the reality of like selling your shares depending on your brokers. That has a cost, like buying as a cost, selling as a cost.
Exactly.
Like if you just buy an ETF that tracks the top 50, you don't have to bother about all of that. Personally, I prefer to I limit my exposition to ETF, so I take some ETF for very specific markets usually that I want exposition on. For example, emerging markets. I don't want to go learn who are the best top companies in the emerging market. I just buy an MSCI emerging market that would give me a good exposition to those specific markets without having to bother. But there are some markets that I just generally appreciate and understand. So, for example, European market, especially the French market, being French, or the US market, because US is everywhere anyway.
Yeah.
And because I understand those markets and I'm passionate about those markets, I have no problem buying the stock on my own because it makes me more fun. But the reality is that at the end of the day, if I would like something easy, an ETF would probably be the best solution and would probably decrease my cost of trades, trading all the time. But actually, a point that you mentioned that was also interesting is I also like to when talking about ETF that are kind of safe or easier to manage.
Yeah, sure.
You mentioned government bonds.
Yeah.
Which is something that is I think also worth mentioning. Government bonds are debt security issued by the government. Usually it's in order to support like spending and obligations or different things that the government wants to invest in. And the government bonds are usually interesting if you want no risk or very, very low risk, assuming that your government is reliable, right?
Yeah. As far as you have a stable government, then...
Exactly. So you basically lend money to your government and they promise you to repay you with a little interest. Usually it's not very high, but the thing is that you are guaranteed to receive this money.
Yeah, I see. So you always have a very tiny amount of interest coming to you, and the chance that you receive it is very high, and the chance that it goes down is like very low. It's like it doesn't happen.
I mean, for the government not repaying you, the government has to go bankrupt.
That's true.
Which will probably be the least of your problem if you lend money to your government. It means that your economy is down, and I don't think that getting your money back will be helping.
You have like more important problems.
You probably have more important problem. But that this is also something that is not often understood. Is like government bonds or investing in those type of assets, extra security, security on the point like no risk, like very low level of risk. This is great when you have a lot of money. So when you are extremely wealthy, could be interesting to do that, because maybe better receiving 2% of 10 millions every year safe. It's like, I think quick math is like 200,000 per year that you receive without doing any effort.
Yeah, why not?
and
If you have nothing better
yeah,
to do, then
and with low risk, this is a fair way of making money. Of course, could be better, but
if you have that much, then that, for example, make more sense to invest in real estate and those more long term.
I think that real estate is interesting. It's an interesting point that you mentioned. Also seen by a lot like as a safe investment.
Yeah.
Maybe let's define real estate a second. The real estate, everyone understands it. This is basically any buildings. Like this is your house. This is the building you go. We are in a building right now. This is kind of real estate as well. Someone own this building and rent it.
Yeah.
Or make it a disposition, and usually someone has to pay in order to use this space. But real estate is not always like an investment, because real estate can help you lose money, right? So people don't always see that. They think, I buy a house, and this is also very common. People think, I make good money, my first investment will be my own house. So I buy my own house, and now I would say that, cool, I placed my money safely for the next 20 years. Yeah, that's kind of true, but there are also some problems with that, which is that as your house is not generating any income, you're basically actually paying tax on it. Something may break, you have to fix it. I don't know, your heater, the electricity, you have a water leak, I don't know, any kind of problem is for you to fix. And depending on where you buy this house, could be that the market where you are goes down, so your house actually loses in value, and in 20 years from now it's the same price or less, and you have invested in order to keep the house fresh, keep the house beautiful, and the house that makes absolutely no money for you.
Yeah.
So real estate is not always an investment, especially if you are not generating income out of it. And this is something that I really want to stress, because I think that most people don't understand that, or underestimate the reality of real estate, which is that if you buy something, make sure it generates money or gain money over time to a higher level than your interest for your loan and the investment you will put in the house in order to keep it fresh.
I understand. Yeah, that's a very good point. Thank you so much, Teddy. All right. So we are talking about all of this, and I think a big question probably everyone has is, where should I start? Like, where can I take my next action?
Yeah, that's a good question. Very good question as well. Where should you start? Usually what I say is like, eventually you can start by taking a few seconds right now and thinking about stocks. And let's start with stocks eventually. Thinking about investing in the stock market. You can take 5 seconds to think about the 5 most relevant companies in your life. What I mean by that is that, can you think of 5 products or 5 companies that you are using at the moment in your life? Like, what is the device where you are listening to this podcast? What is eventually the internet supplier that is providing you internet right now?
Yeah.
And those type of questions can help you identify companies that probably are valuable to you.
Yes.
Therefore valuable to other people. And then as soon as you have those 5 kind of companies, the second step is to just Google them. So company name plus stock price.
Yeah.
So that will help you identify if those companies are public or not. Mm-hmm. Because if they are not public, there will not be a stock price. And if they are public, that will be a good exercise for you to start just looking at the price of this stock and start like eventually following this price.
Yeah.
Like, does it go up? Does it go down? And as soon as you start looking at those, eventually start also looking at why. Why is the price of, I don't know, we both have Mac here. Why is the price of Apple going down, assuming in 2 weeks from now? That is interesting, because if Apple still sell as many laptops and as many iPhone and as many software services as before, Apple losing like the volatility of Apple stock is just Mr. Market being a little bit
aggressive with Apple.
Yeah, a little bit bearish on Apple because he doesn't like Apple today, right?
Yeah.
Or this month, or this week, or this quarter.
That's true.
And that can help you identify, seems like everything's going fine for Apple and the price is going down, maybe an opportunity to buy. Doesn't mean that you have to act right now, but maybe at least it helps you understand. Start to think about opportunities.
Yeah.
Because where to start is really like understanding some company, like having some companies in mind, following their progress.
Yeah.
And starting to identify if an opportunity is raising for you, right?
That's right.
And as soon as this opportunity appears, then you can eventually start about asking some question like, okay, can this company still really be there in 5 to 10 years from now? Am I personally going to need this company more in the future or less? And the more you start answering those questions for yourself, the more you have a good understanding of the company, and the closer you become to actually start buying a share of ownership of this company.
It's true.
Because at the end, this is what it is of the experience of buying stocks. It is buying us a piece of cake, and you better be sure that this cake will still taste good in a couple of years from now, assuming that you want to keep the stock for a longer term.
Yeah. All right. Okay. So I have to find a company that I believe in by saying, okay, which company is bringing the most value to me. So if I'm using MacBook every day, like 10 hours a day, then probably Apple is bringing a lot of value to me. If I'm using Android phones and Pixel phones, then Google is probably bringing a lot of value to me.
Exactly.
And kind of figure those companies out and figure out if they are public.
Yeah.
Because if they are not public, then it's probably not so easy to go and buy some share.
Exactly. You will need some contact.
Yeah. All right. And then I should go to a broker to buy. And like these days, well, most of the time there are like online brokers and lots of good apps that you can go and buy stocks on there. But how can I, for example, based on my location, based on where I live, how can I figure out which app to download? Because there is a lot of options. You have a lot of different apps. Like when you search for investing in App Store or Google Play Store, you see a lot of options. So how can I choose?
Yeah, that's very personal question. I would say it depends where you are. Talking about companies that brings value to your life every day, it's a good opportunity to Google it, right?
That's
you
true.
Google like some apps and maybe add your location to and some reviews, and you see if there are like a lot of people using this app that's actually gain value. You have to be very careful though. Sometimes the most popular apps are not the best one. So you have to pay attention to a different set of things like is this app really popular for offering great services? So there are like possibility to have a lot of different assets and securities, ETF, etc. Those type of things must be in your mind. It's very, as I said, a personal case. It depends also on the law in your country. But you shouldn't, my point is that you shouldn't just jump on the first app that say no cost at all,
okay.
or no trading fees.
Okay.
That could be very interesting, of course, to have no trading fees. I understand the appeal for that. Robinhood being a company famous for it, but Robinhood has also shown that like no trading fees, like if you don't pay for something, you likely are the product, right? And a lot of people don't understand that those apps that have no trading fees, they basically sell your orders to a market maker that will buy quickly the stock and then resell it to you for a higher price via different kind of tricks to get the stock faster than you. Not wanting to go too technical for this day, for today about that, but the point is that look at your market, Google it, make your own research. If you cannot make your own research on the app, the broker you will select and place your money in order to purchase companies, purchase stocks, you're probably not ready yet to buy any company.
Okay. Okay. So it makes sense to see to find a broker that has very low fees.
Exactly.
That means very low amount of price that you have to pay when you buy a stock. So if, for example, if a Google stock is 120 euros or dollars and you want to buy that one, you only not pay much more than 120, like 120.5 or something.
Yeah.
So a low amount of fee, and it's also well known in your country or your region. So
yeah, exactly.
So I think that's why it's also important to know what stocks you want to buy or what ETFs you want to buy, and see if that broker that you want to start your account with them has reasonable fees for those stocks.
Exactly, because each broker sometimes operates on different market.
Yeah.
And the fees are not the same. So there are some brokers that, for example, are specialized on European countries and that will have low fees for European countries.
Yes.
And as soon as you try to buy a US stock, the price will go up. It's rarely the case. It's actually the opposite. So, for example, US is usually cheap because everyone has an exposition, and like every broker try to get some exposition to the US market. Yeah. But as soon as you try to go on the European market, then you get some disparities. For example, you have some specific broker like Degiro. It's a Dutch broker historically, and they have very good price when you try to buy in France or in the US. Yeah. But as soon as you try to buy in Germany or Eastern countries stocks, the price will skyrocket. Oh. The same type of company companies having a certain, let's say, a 1 billion market cap, and a stock price of, I don't know, 100 euros, eventually will cost you €1 to buy in France. For this type of company, the price will just it will be 1% of the price, stock price. But if you try to buy in Germany, because they don't have the same exposition or they don't have the same deal with the market maker there, the same kind of stock will cost you €5, right? So 5 times the price. And if you invest on the longer term, you do not really care about €5 fee. Mm-hmm. But if you know already that you will kind of sell at least once a year, buy and sell once a year, those fees can quickly add up.
That's true,
So you need to be careful. But in general, to be honest with you, Ali, I think that fees are not the biggest problem if you are a real investor. If you are not trying to be a trader, you shouldn't care so much about the fee. Okay. You should just care about, does this broker provide me with the assets and securities I want to buy? Yes. And then regardless of the fee, it doesn't matter because I will keep the asset or the security for the next 10 years. So like the 5 or 10 euros fee, who cares?
That's true, yeah. All right. That makes sense. So it really depends on what's your use case. So if you want to buy a big amount of assets at once, then that's not very important. But if you want to buy and sell, or maybe if you want to buy in a exact interval, like for example,
regular basis,
like once in a month, and then you should consider that you have to pay that fee once in a month as well.
Exactly. Yeah, this is a very good point, though. Exactly, because there are different investment strategies that we will eventually discuss in our next podcast. Yeah. But if you one of the easiest strategy is to probably buy regularly, have an exposition to the market regardless of the situation. Maybe once a month, once every quarter, you decide your regularity. But you try to get an exposition to the market on a regular basis. And yes, indeed, if you know that you will make transaction quite often, even if you do not sell, you eventually don't want to have too many fees, because, for example, if you just buy once a month just one stock, and you have a €5 fee, well, you already pay €60 per year just to buy 12 stocks. Yeah. So
Yeah, so it adds up.
It adds up quickly. Yeah. If you have 10, if you decide to buy 10 stocks every month, it's already 600 euros. That's how
that's true,
got at the end of the year, and that is a big price.
That's true. That's a lot. Yeah. All right. I'm just scanning through the Stocks app on Apple. I think on Macs and iPhones and everywhere you have this Stocks app. And when I scroll through the stocks, there is a number, underneath the chart. It's called market cap.
Mm-hmm.
I was wondering what's that number, because it looks like it's a big price of something.
Yeah, I think it's a good way to close actually for today. The market cap is maybe the last thing that you want to. Not the last thing, but the last thing for today that you want to keep in mind is the total price, the total value of a specific company. So it's the way it works. Like right now we have in front of us Apple that is worth kind of $2 trillion, one of the biggest, if not the biggest, market cap in the world, and basically. This is actually the real thing you need to pay attention to when you decide to buy a company. It's not always is the stock expensive or not.
Yeah.
Stock could cost 1,000 euros. Doesn't mean that the company is expensive. It just means that there are little amount of stock that are emitted, and therefore the price is high because they are just in smaller quantity.
That's true.
You have some companies that are very low price in terms of stock. So the stock costs 2 euros, but the company can still be extremely expensive because they just emitted a lot of stocks, a lot of cake, Stück part, right? Steak pieces, cake pieces. And
so German, French,
English,
French, everything.
Yeah, it's a mix. And the company is valued as way too much compared to what they are really worth. Yes. So to answer your question in one sentence, the market cap, once again, is just the total price that you would pay if you would want to acquire the full company. So when you buy an Apple stock at 144 USD today, you shouldn't look at, I pay 144 USD for the stock.
Yeah.
You should actually say, I pay Apple $2 trillion US dollar. And now, when you and think about it, like if you add $2 trillion US dollar, would you really buy Apple? If the answer is yes, because they make enough profit, enough revenue, they have enough cash in the bank. If for all those reasons the answer is yes, then buy it. Buy Apple definitely, because if you had all the money in the world, you would still buy it.
Okay.
But if you decide to buy, I don't know, let's say another stock, Amazon, or let's say a more speculative one, Tesla is worth already 655 billion US dollar. And if you consider that the money Tesla make every year and the profit that they make is not enough for you to justify putting 655 billion on the table, then regardless of the Tesla stock being priced at 20 or 200 US dollar like it is right now, eventually this is too expensive.
Yeah.
And this is why market cap should always be a thing that you check, not only the price stock, but the market cap, because you want to know, okay, what is really the real price of the full cake, not just a piece of it.
That's true. Yeah. Yes, hopefully until the next podcast we will buy Apple.
Let's see.
All right. So Tim Cook, wait for us. We are coming. Is there anything else, out of kidding and everything, is there anything else that you want to add before we finish today's talk?
I don't know if there is something particular that I want to ask or to specify, but there is one thing that I would like to add, and that I would like everyone to keep in mind, is that never forget that Mr. Market is a lunatic. That's really something that, if you have one thing to take away, keep that in mind. it's a freaking lunatic, and like in real world you would not base all your decision on how the lunatic react, right?
Yeah.
You probably just stay calm, stay objective, look at data, and take a rational decision. Try to keep the same spirit in the stock market, and you will be free.
All right, that's great. Thank you so much, Teddy, and thank you so much for your time.
Thank you, Ali. It was a pleasure.
And everyone listening, stay tuned for our future episodes, and feel free to let us know if you have any questions. We will try our best to answer all of them in the next episodes. Thank you so much for listening, and wish you have a great day. Bye.
Thanks. Bye.